at a normal price. So the fact that we sold our car to my wife's cousin, even in the event that we had sold it at the going market rate, we would still have to make a disclosure of that fact in the notes to the accounts. Yeah? So it's not a valid excuse. I have seen, fairly recently, related party transactions being examined head-on. So this 5 marks is about related parties. But I've also seen related party transactions come up more frequently as a little layer in passing. In other words, what I'm saying is this. Every time it says the company transacts with the parent, or every time the company says that the company transacts with its director, or every time the company says the company transacts with its major shareholder, yes, is it a finance lease? Is it an operating lease? Is it a loan? How do you deal with financial instruments? You're dealing and discussing about the transaction, but as an extra point, you've got to bring in, it's a related party transaction, and because it's a related party transaction, it needs to be disclosed in the accounts. It's the nature of teaching that we teach in silos. Yeah? That we teach one topic at a time. But the examiner examines the whole syllabus, yeah, in a sort of mixed up, integrated way. So, for example, related parties does come into group accounts. If I borrow money from my parent, in my accounts I have a related party transaction, as indeed the parent does. But in the group accounts, that transaction is intercompany, so that transaction is eliminated, so there isn't a disclosure in the group accounts, but there is at the individual company stage. Now, for associates and joint ventures, equity accounting is applicable, so they're not eliminated on consolidation, so there would be a disclosure. My final point. Transactions between the parent and the sub are related parties at the individual company stage. But in the group, transactions between the parent and the sub are related parties at the individual company stage. But in the group accounts, these transactions and balances are eliminated. But in the group accounts, these transactions and balances are eliminated on consolidation. Therefore, there is no disclosure because there is no transaction. Okay? That's a little bit like I was saying about investment properties. If you rent a property to your parent company, you have an investment property. But in the group accounts, it's not rented outside the group, so in the group accounts it's not an investment property. So, can bring groups into so many things. You could tackle topics from so many different areas. The thing about related party transactions is there is no debit, there is no credit, there is no measurement issue. It's not, should we use cost, should we use fair value? There's no profit, there's no loss, it's just a disclosure, all right? And I think it's important that we know that we have to make that disclosure requirement. The examiner is often wearing the clothes and impersonating a creative accountant, saying, oh, let's not bother, or oh, I'm ignorant. We've got to be wise, and we've got to be knowledgeable, and we've got to bring in related parties as an issue if we see transactions with a parent, with a group member, with a key management, or with major shareholders. Fantastic. You have been very patient. We have covered a lot of ground this morning. But all good things must come to an end. And although we have looked at deferred tax, and we've looked at intangible assets and investment properties and related parties, I find the time is lunchtime. When we come back from lunch, we need to have a look at a number of different issues, segmental reporting being one. We need to have a little bit on financial instruments again, maybe also a little bit on integrated reporting. But that is all for the afternoon. But now let us take a break, and when we come back from the break, it will be in an hour's time. So thank you for your patience.